everybody. This is episode 2 of Crowd Talk, powered by African Crowd. And I'm your host, Batu B. Mutubudi. And just briefly, the essence of Crowd Talk really is to educate, to empower, and experience the beauty of crowdfunding. I think it's such a powerful um, alternative source of financing that we're not taking advantage of. And we realized that what we needed to do was engage with you, the community, so that we get to a point where people really understand what investment or equity crowdfunding is. And periodically, we'll have people like Bill come in, just give their perspective and be able to sort of open your eyes. Particularly if you're an entrepreneur, this is an opportunity for you to start thinking about, okay, fine, if I'm looking to raise funds, and I'm thinking that it's such a difficult task to get yourself to bank financing. What options do I have, right? So you could go the venture capital route, but even that is a challenge because you have to sort of fit a stereotype, and really you sort of have to be a tech business that is going to get into hyper growth mode and really leaves out those what we call main street businesses. For instance, in the context of Botswana, if we're thinking about somebody who wants to, let's say, open up a butchery in a remote village, they might have a business case, and that business may never, and not say may never, it will never ever be worth $1 billion. It will never ever be worth 1 billion pula. It will probably never even be worth 100 million pula. Maybe it could grow and be worth 10 million pula. It doesn't mean that those businesses shouldn't be financed. We just have to figure out how to finance them in a manner that doesn't put them at risk. And that is why we're here. So I want to, just briefly introduce our guest for today. And this is Bill. Bill Huston. He has been named a top 19 global crowdfunding expert by Inc. magazine out of the US. He's a founder of crowdmax.com. This is an investment crowdfunding education and coaching agency. He's an executive director at American Dream Marketplace, which is a free social marketplace created for Black businesses and entrepreneurs. And he's a board member of the National Coalition for Community Capital. So I think we're very, very blessed to have Bill speak to us today. I've engaged with him a couple of times. I mean, we probably met about a month ago, right, Bill?
Yeah, about a month ago.
Yeah, and in this month we've probably been on 3 to 4, maybe even 5 meetings, and we've just really gelled, and we're fighting for the same thing. He's in Louisiana, I'm in Gaborone, but ultimately this whole continent needs people like us to try and move and create solutions that help people. So without trying to take your steam away, Bill, can you just tell us a little bit about who you are, and maybe even contextualize it into the sense of how you got into the world of crowdfunding?
Yeah, absolutely. So one thing I want to say, two things I want to say is that I don't work with the American Dream Marketplace and fund anymore. I actually am full time with CrowdMax, and I live in Louisville, Kentucky, and not Louisiana. Just to give a shout out to the west end of Louisville. The West is the best. So absolutely, to tell you a little bit about me was really interesting. Growing up, we never thought about business. We never talked about business. That was just something that we thought other people did. Growing up, I was always taught, to go to school, get a good job, especially in the medical field, because people will always be sick and there will always be an opportunity, for you to have a job. And, getting a job was really the only thing that I ever thought about. It was the only thing that I ever really known. I did not know a single person who owned a business. There was a man who lived on my street who owned a couple of houses, and that was the closest thing that I knew to an entrepreneur. fast forward, and I joined the Army in 1982. I joined the Army, and while I was in the Army, I was in San Francisco, California, and I had the opportunity to find a magazine called Black Enterprise Magazine. And I was so impressed by that magazine because it opened my mind to things I'd never known, never thought about. Right? I mean, these were things that I could not even have imagined. And I was so excited that for Christmas, the Christmas that I found Black Enterprise Magazine, what I did was I got a subscription for like 9 of my cousins, to kind of read it because it was something that really laid an impact on me. And then fast forward, I moved. I got out of the Army. I worked in the medical field, and and I started working in the medical field, and I did that for maybe a decade and a half, and but always inside me there was this drive to kind of do my own thing, but because business wasn't something that was like in my family, in my culture, I had to learn a lot, and I really understand this at a deep level, that a lot of times, as important as access to capital is, a lot of times it's not the complete answer. I really need to understand business, how business works, and business development. And one of the reasons that I love crowdfunding is because crowdfunding, when you unsilo it as a way to raise capital, is a great business development tool because it forces you to learn about your business, understand your business well enough to be able to market the business. But kind of moving forward. So my son and we started a company called H2 Communications, and that company was I would actually promote businesses, here in Louisville, Kentucky. He would shoot videos and I would promote them on Facebook and Twitter, which seems like forever ago now, but it wasn't really that long ago. And he was in a program called Community Action Partnership, CAP for short. And there were about 7 businesses in CAP. And of all those businesses, they were trying to get like a grant for, I don't know, $2,500, $5,000 from the city of Louisville in order to grow their business. Well, one day the director came in and she said to us, she found this website called Kickstarter. And that Kickstarter, if you shot a really cool video, and I always remember saying really cool, like if your video wasn't cool, people wouldn't fund you. But if your video was really cool, people would fund you. So one Saturday, we shot 7 videos. She put them up on Kickstarter, and we didn't raise a single penny. So I started looking into Kickstarter, and I wondered, if some businesses are getting funded, why are we not getting funded? And what I quickly discovered was this, and I call this the one fundamental rule of crowdfunding. And that is, if you do not build an excited and engaged crowd, you absolutely will not get the funding that you're looking for. Crowdfunding is a compound word, and you really have to focus on the crowd because that's where your funding is going to come from. So, kind of fast forwarding from that, this was about 2012. I became enthralled with crowdfunding, and it was like my every waking moment. The only thing I thought about was crowdfunding. So what happened was I took the skill set that I had, marketing, digital marketing, and I moved it over to crowdfunding. And I would call people up, reach out to people via email to work on their campaigns for absolutely free. To learn about this space and to learn, how I could, really make a business and create a business in this space. So like I said, that was around 2012. In 2014, Inc. magazine named me one of the top 19 global crowdfunding experts to know. I've had an opportunity to raise capital using crowdfunding, all across the world, which was really exciting. And then in 2016, under Title III of the 2012 Jobs Act, investment crowdfunding Title III crowdfunding became legal, right? So now it was tied to securities. And what happened was it started out really, really slow. It took 4 years for it to even become legal in the United States. And then the first 2 years, there wasn't a lot going on. So in 2017, I had an opportunity to go to Los Angeles and to speak on a marketing and PR panel at the Crowd Invest Summit. And when I was there at the Crowd Invest Summit, it was really nice. It was massive. There had to be 1,000 people sitting in the main room listening to us. And as I looked out over the crowd, the one thing that I noticed was that there were probably a handful of people who looked like me. And I thought the community who needs this the most is the least represented in this room. So I kind of made it, a mission of mine to really introduce, my community to crowdfunding. And, again, it was very slow. I worked with By the Block, which was the first Black woman owned Reg CF platform in the United States. They have now kind of gone by the way, but I worked with them very closely. We had a couple of campaigns that were successful, but the campaign that resonated with me the most did not raise a lot of money. But because I had tried to start a business selling fresh local food in what they call food deserts, and we were actually successfully growing our business, but we reached a point where we needed capital to grow. And we went out on the search for capital. We couldn't get bank loans. We ended up going to the city to try to get a loan, and the city said they would write us into a grant. They didn't write us into the grant. The Great Recession came, so everything kind of fell apart. But and then back to 2018, there was a woman from Chicago, the south side of Chicago, and she was doing something very similar to what we were doing. And the only difference between what she was doing and what we were doing was we could not get access to capital. She was able to go directly to the people who were going to buy fresh fruits and vegetables from her to raise the capital. And that really showed me and demonstrated the power of investment crowdfunding. And it really demonstrated to me the power of the crowd, right? Because these people were going to benefit from the success of this business. And now they were going to have a financial benefit tied to the success of this business, as well as consumers being able to get fresh fruits and vegetables. So, throughout that process, and you can please tell me to take a breath if you want to ask another question, because I can just keep going. Uh, through that.
Yeah, I'll chip in. I'll chip in. No, but go ahead. Finish your thought.
Yeah, so through that process, what I did was I created something that I call the Crowd Fit program, and the Crowd Fit program was specifically targeted for Black owned businesses and founders. In the United States, when you look at some of the data points, only about 4% of SBA loans go to Black owned businesses. Um, Less than 1% of venture capital goes to Black founders. And crowdfunding is a mechanism that allows us to raise capital directly from our crowd, right? Your money is in your crowd. And that is a powerful advantage because the crowd's going to tell you yes, not right now, or no, right? And I mean, nobody wants to hear the no, but those are really the realities of crowdfunding. And that's why I think crowdfunding is such a powerful tool, especially for businesses like you mentioned, the butchery. Right. So, that would be a business that would never, ever, right, get venture funded or angel funded. But the people who are going to benefit from having that butchery in their town, they could fund that business. They're going to get meat, fresh meat, but also the more successful that business is, there's going to be a possible financial return for them. So as an investor, as a crowd investor, you actually have the opportunity to drive the valuation of the business. And I think that is so powerful.
Okay, I think this is where I step in. You segue right into my next question. So let's talk a little bit more about CrowdFit. So I'm an entrepreneur. I'm listening in on this call and I'm saying, okay, fine. Bill started a program that talks about CrowdFit. In your view, what is a CrowdFit business or what is a CrowdFit entrepreneur?
Great question. A crowd fit entrepreneur, and again, this is I really want to talk about crowdfunding as a business development tool that is unsiloed from just funding or just marketing. So one of the things that I understood working with many founders early on, before I actually created the CrowdFit program, was a lot of times people don't necessarily understand their business, what problem they're solving, why they have the best solution. Is it a problem that needs to be solved? How large is the potential market? So all those business development tools are very important, because what it's going to do is it's going to inform who your investors are potentially going to be, and the messaging that you're going to use for those investors, right? So your investor persona and the messaging that you're going to reach out to those investor personas using. So when I say that, what I like to do is I like to use a lean canvas that has been structurally changed to focus on companies that are going to raise capital through crowdfunding. So that is always the first step, is actually understanding your business, understanding who your target market is, understanding where they are, what message is going to resonate with them. Now, of course, we're going to test all of these things in the process. But a CrowdFit business is a business, or a CrowdFit founder or entrepreneur is one who really understands their business, the problem that they solve, why they have the unique solution to solve that problem, who they're solving that problem for, what are the benefits of the product. If I'm unaware of these things, right, I am not going to be able to crowd fund. So that the first piece is business development, using like a lean canvas or a modified lean canvas that we use for crowdfunding.
I like that, Bill, because I think what it does is that it emphasizes the fact that you may not necessarily be going to an institution to raise your funds, but the fundamentals remain the same. If you don't have an exciting story to tell, nobody's going to be interested in what you have to offer. And I think, when you talk about business development, it's like, I remember, a number of years ago when we were learning about investments in the context of the capital markets, um, when people don't know what they should invest in, they were usually advised to just, for them to try it out with money that they didn't mind necessarily losing. They would try it out with products that they utilize. So I'm going to give examples in the context of Botswana, right? So there are four banks on the stock market, and maybe I use ABSA. So if I don't know, I know that I want to invest in a bank, but I don't necessarily have the skills that allow me to analyze banks and pair ABSA against FNB, against Standard Chartered, or whatever other bank. Some people would just say, well, go and buy shares in the bank that you use. So I think one of the benefits is that if you understand your market well, and you are able to do that crowdfunding, you are then able to you're sort of pre-marketing your business, like you said, as business development. So people are going to use your product because now they have a strong reason to. It is part of what they now start to know and love, and I think that's really a cool benefit that sometimes people overlook. For people listening in, please put your questions in the Q&A. I mean, I can ask Bill questions all day, every day, but I'm also interested in understanding, is he answering the questions that you have? What's on your mind? So please use the Q&A tab, ask your question there, and then we'll start looking at questions maybe in about 10 or so minutes. If there are none, I have a bunch of questions I'm going to ask him, so I'm going to continue until I see that there are questions there. So, okay, Bill, I think, how does one best prepare for a crowdfunding campaign, including maybe setting realistic funding goals and creating that attractive pitch? I mean, I know you may have just glossed over some of the elements, but can you just sort of point us there?
Absolutely. If you don't mind, can I go back to a point that you made, because it is very relevant, especially for Main Street businesses, small local businesses. When I first started looking at investing, there was a there was a Magellan fund on Wall Street. It was a mutual fund, and the founder of the fund, or the manager of the fund, his name was Peter Lynch, and he's a real famous guy back in the 80s, and he wrote a book, and it was called One Up on Wall Street. And one of the interesting things that he said, and this again is something that you just said, and this makes crowdfunding so powerful, because even though he was on Wall Street, his whole thesis was don't necessarily invest in tech. Tech was really new at this time. He said, don't invest in tech. Invest in things that you understand. As an example, invest in Procter and Gamble, because that people buy toothpaste, people buy soap, people buy toilet paper. That is something that you know and that you understand. And when we think about investment crowdfunding, especially for small local businesses, it's kind of the same thing. If you are investing in businesses that you are going to actually be a customer in, then what that owner of the business is getting through a crowdfunding campaign is an investor. They are getting a brand advocate, and they're getting a customer, all rolled into one. And that is really, really powerful. I'm going to answer your question, but I just think that this is like super, super important for small business owners to really understand. And that is what I like to call the return on crowd, right? So we all talk about the return on investment. But if you invest in building an excited and engaged crowd, the return on that crowd is going to impact your business on so many different levels, right? One is going to be as a consumer, one's going to be as an investor, as a brand advocate. I'll give you a real quick example, and then I'll get back to the question that at hand. And there was a campaign that was selling a consumer facing product. The valuation of the company was really high. And the people from the platform said that the valuation is too high. Of course, they couldn't make us change it, but they said we wouldn't be able to successfully raise capital. But what we had and what we knew as we started working with this company was that we had 12,000 email list of people who had purchased the product. Right. So we weren't necessarily looking at angel investors or anybody who was on the platform. What we were looking at was engaging with the people who already believe in the product, who already use the product. And, you could go there to the page, and you could see, that we actually had a super successful raise. But what you don't see is that year over year, we were able to increase sales by 250% of that product, because we had investors who were customers, who were brand advocates for the company. So when we think about crowdfunding, investment crowdfunding for small businesses, for local businesses, for consumer facing products, never lose sight of that return on crowd. I just thought that was really important to say. Could you please re-ask me the question? Because I just went somewhere else. I'm sorry.
But I think you've sort of given us an answer, because I was saying, um, how does an entrepreneur best prepare for a crowdfunding campaign, setting funding goals, and creating an attractive pitch?
Okay, I would love to answer that,
Mhm.
because in reality, that is one of the most important questions that you could ever ask yourself as an entrepreneur or a small business owner. Is how do I prepare myself? How do I know what is a good and realistic goal? And the way I do that is crowdfunding works like this, right? What I do is I engage my social capital from the inside out. Why do I do that? Because if I can't get the people closest to me, who know me, who have faith in me and what it is that I do, people that maybe I went to college with, people that I grew up with, whatever the relationship is, if I can't get them to invest, it's going to be very difficult for me to get people who don't know me, who don't really understand, what it is that I'm doing to invest. And the other thing, the other part of that, right, is that what people who don't know you are going to be investing in is the momentum that you have demonstrated to date, right, on the crowdfunding page. So that's very important. So with that being said, it it is important that you go through all your connections, all your primary connections, potential secondary connections, but I'll talk about that in just a second. So go through your primary connections, segment those people. How many of those people would invest in you, right? Dollars. How many people would share your campaign? And how many people would do both, invest dollars and share your campaign? Make a list of those people, and hopefully you've talked to them recently. If you haven't, they may need to be warmed up. So going into your email list, your business email list, your personal email list, your phone contacts, looking at the people who have connected with you one-to-one on LinkedIn, that is a great place to start. And why is that a great place to start? Because you can speak directly to those people, and the size of the checks that they can write and the size of the people who are going to support you financially are going to inform how much money you can raise. And I say that because you want to set a conservative goal that you can actually hit. In investment crowdfunding, unlike Kickstarter and rewards world, you have a minimum and you have a maximum. So most of the time you're able to set your minimum goal. When you reach that minimum goal, you are considered successful. And the beauty of this is that you can then begin to draw down funds. And why is that important? It's important because then your marketing can change. Because number one, you've already reached that minimum, so you have tapped that inner circle, right? You have hopefully exhausted all the people who you have relationships with, pre-existing relationships, and now you are going to start looking for other people who are going to invest in that momentum. So you may need to do some more video marketing. You may need to do Facebook ads, LinkedIn ads, whatever those are. You might want to get content writers, to come on and do content marketing, whatever that looks like, without getting too much into tactics. But it's important that you understand, when you set that minimum goal, how big your network is and how much support you're going to get from that network. That is absolutely vital. And that, again, that network and what you can do in pre-launch, testing the waters is what it's called, for investment crowdfunding. That's going to inform what you should set your goal at.
Okay, no, thank you very much. I'm going to start going into some questions that have popped up. So, Mimi wants to know, is the crowd that may invest in your company sort of shareholders? What's in it for them?
Yes. So let me take a step back to the beginning of crowdfunding, and there are basically three types of crowdfunding. There's just donation crowdfunding, where maybe there's been a tragic event in someone's life. There's been a natural disaster, and people a lot of times will use GoFundMe, and I'll go to GoFundMe, and I'll support that, whatever that is. And the only benefit I get from that is maybe being a good human being, and trying to help someone who was less fortunate than me at this particular moment. It's just a donation, a straight donation. Rewards crowdfunding, in a very strict and technical sense, is a donation, but it comes with some type of reward. A lot of times today, when we think about rewards crowdfunding, it is tied to a physical product. So you are literally pre-selling your product to people. What I like to call investment crowdfunding, some people call it equity crowdfunding, but I call it investment crowdfunding because it doesn't have to be just equity, it can be debt. That is tied to a security. So I am either owning part of the company, a piece of the company, or I am loaning that company dollars, right? Where I'm going to get my principal back plus the interest, right? Whatever the terms are, and the terms are set. So with investment crowdfunding, yes, I am an owner. Most of the time, there's some companies raise using debt. But most of the time, people are buying shares. They're buying into a safe for future equity. So yes, what you get is a piece of the company or a piece of the company's profits. So absolutely, investment crowdfunding is different. That is a great question, because a lot of people don't make the distinctions between the different types of crowdfunding. What we're talking about here is me investing in a company, with the hope and the possibility that that company is going to grow and that the value of my shares are going to absolutely grow. What crowdfunding does, and I like to kind of say it this way, is it allows me personally to be a mini angel investor. Right. So in the U.S. for 80 years, non-accredited investors, regular people, people who made less than $200,000 a year or who didn't have a net worth of $1 million, minus their primary residence. Those are called non-accredited people. People who hit that mark and are above are called accredited investors. So wealthy and non-wealthy people, right? Regular people and wealthy people. For 80 years, only wealthy people were allowed to invest in private placement. On April 5th, 2012, President Obama signed the Jobs Act, which changed that. And then on May 16th, 2016, that went into effect. So now anyone over the age of 18 is allowed to invest in a company that is raising on a FINRA SEC certified platform. They can raise. Now there are limits to how much you can invest, but you are literally investing in those companies, right? Either as a debt holder or an equity holder. So what's in it for you is the potential growth of that business, and the success of that business. And if I can go back for 1 second to something I said a little earlier, and this may be even clearer now, is that if I am an investor, that is absolutely a reason that I want to be a customer and a brand advocate, because as an investor in that company, as a customer in that company, as a brand advocate, I have the ability to literally drive the valuation of that company by ensuring that business is going that way, which is going to not only benefit the business, but it's going to benefit me as an owner, as a shareholder, right? No longer just a stakeholder, but a shareholder in the company.
Awesome. Thank you so much for that. Maybe if you have a follow-up question, don't hesitate to ask. But right now, this is a question from Oboni. She says, I'm a part of a group of ladies who have raised funds and have had a challenge on what to invest in, mainly because we have different risk appetites. I'm actually going to invite her to stage so that maybe she clarifies the question. Oh, she can't be invited because she joined from a mobile device. Sorry, Obi. So let me see if there's a follow-up. Okay, so I think the challenge they have is they have a pool of funds and don't know what they should invest in because, like she's saying, they have different risk appetites. Now, how would you sort of advise that person if they're looking at maybe investment crowdfunding? Understanding that you're not a personal financial advisor. This is for education purposes
Right.
only.
Educational purposes only. Right. Absolutely. So here's the beauty. This is a great question. These are two really powerful questions. This is a great question, and this is another benefit of crowdfunding that many times people kind of overlook. And because crowdfunding has to be done on a portal, right, that is public, what you can do is you can diversify across the types of platforms, across the companies on the platforms that you want to invest in, because the minimum investments are usually very small, between $100, $250. Let's say you had $1,000. You could literally invest $100 in 10 companies, right? And get the diversification that you want. You could invest in companies, as a safe, as you could invest whatever terms it is you want to use. If you wanted to invest, some of your dollars in a company that has revenue share, some that were debt, some that were using a safe, some that were using a convertible note. It really gives.
Just to interject there, can you just maybe briefly unpack what a safe is, just from a practical perspective, that
Sure.
you're waiting for a future funding round?
Yes, and really that's what it is. It's really a promissory note, an IOU that says if there is an additional round of funding, then I am allowed to claim the price that I purchased at prior to, or when I purchased through the investment crowdfunding, right? So, as an example, if I purchased shares at at a dollar, for instance, just to make this easy, and then another round of investment dollars came in and they purchased that at $10, right? Then then I made $9 because now that the stock, the share of the stock is worth $10, but I purchased that safe, right, for future equity at a dollar. Was that a good explanation? That I tried to keep it really simple.
Yeah, so one way to look at it is that, and why would you invest in a safe? I'm Batu Mutubudi. I come to African Crowd, shameless plug, as a platform, and I have this idea that I'm going to take coal and I'm going to create fuel in it and I'm going to use all sorts of technologies. So nobody really knows how to value what I've put together. I may or may not have a patent, but it's an idea, right? So nobody knows how to value this thing. So instead of going through an exercise where we're trying to create a valuation where there's so much uncertainty, what the safe does is it says, and it can be capped. I'm Bill is an investor. Bill says, I'm gonna invest in you right now while nobody is investing in you. So that if you get to a point where you are in a price round, the price round is where maybe, let's say, a venture capital company comes in, or you value the company at a later stage, like he said, for $10. I would then have my shares probably discounted to that $10, like he says. So really, the reason why you have a safe is so that you don't spend too much time worrying about what the valuation is or the value is now. You're saying, I like the risk, I like the company, I like the mission, I'm going to invest now. But because we don't have a mechanism of pricing, we will use a reference price later on. So that's why you would use a safe. So you were talking about diversification. Sorry for interjecting.
Oh no, thank you. That was a much better explanation than I gave. I appreciate that. Yeah, so the platforms allow you to diversify because the amount of minimum investment is so small. So you could literally take the group that you have and you could provide a taste for everyone, right? So the people who were super conservative, they could invest maybe, in debt, in a small debt company, and or even as the portfolio and whatever that looked like, there could be an end where maybe it was heavily weighed towards debt. And then on the other end, you could take 5% and and put it into put to a safe or maybe multiple safes, right? Where you had the opportunity for some potential explosive growth, a better opportunity for explosive growth than you would have with the butchery, right? Now that you go to the butchery, that everybody goes there, so that they are going to make money, they are going to pay they're going to pay their interest payments, and you're going to be able to pretty much count on that, right? No investment is 100%, right? You can always lose, your principal, but you know, you're investing in something that you feel is a lot safer. And that's where part of your money goes, and maybe your portfolio is weighed 80% in that direction, and then in the middle of that, maybe it's weighed 15%, and then on the much riskier end, maybe you weigh your portfolio at 5%, and say, you know what, I'm going to take a chance that some of these companies have the ability to provide explosive growth for me. So the answer to that question, this may have been a long way around to the answer to that question, is that for a group like yours, literally looking at and doing due diligence on different platforms that may have different target markets, and even if you're on the same platform, looking at that risk appetite and investing your portfolio across that. Is a very powerful way and a very powerful opportunity to use investment crowdfunding and to diversify your portfolio.
Okay, excellent. Thanks, Bill. There's a question from Carlos, and he says, or she said, I'm assuming it's a he, but Carlos is saying, what artifacts and or documents would be required to begin an investment crowdfunding campaign?
Would that would be a founder who's looking to use crowdfunding? Is that what we're talking about here?
Yeah, I'm assuming that.
Okay. So, really the legal requirement is going to be what they call a Form C. And a Form C is a legal document that is filed with the SEC. And that document, I say it as though it's a document, but that document has a tremendous amount of information and questions that are asked. So it's a single document, which would be the Form C, but there are many questions that are asked. That Form C is the public-facing document that ensures that every investor, every person who comes to look at a particular company on an SEC and FINRA platform is seeing the same information. I'll talk a little bit about the marketing here in just a second, but the Form C is that document within the. And I don't want to just make it sound like it is a single document, but there is a tremendous amount of information that goes into the document. Around the Form C and other documents that you can have is if you want to upload, like a business plan, if you want to upload financials, you can. But the Form C is going to require that. That's required. That is the required document. It's going to take a lot of information. It is a document, depending on how sophisticated you are, you could potentially fill out yourself. But I would always seek out an accountant, a CPA, and an attorney to get that legal advice to make sure that I am compliant with what it is with Reg CF regulations. But the Form C, the simple answer is that it's the Form C.
Okay, so just to highlight, some of our audience is not in the US, that those are regulations for a crowdfunding investor raising on a platform that is registered in America, correct?
Yes.
Okay, so I think for non-Americans, like for instance, the honest truth is in Botswana, and don't quote me on this. I know we're recording the session, so it's gonna come out one way or the other. We don't have regulation yet. But we are working with the regulators to try and find a way so that we can exist in this space. And just to give an example, I think maybe 10, 15 years ago, we didn't have any regulation for micro finance institutions. They were operating, but once the regulator started, it was one of the sectors that they looked at. And then when you were operating, you were given a grace period to comply. So from our perspective as a self-regulating entity, we're really going to be looking at the business model, the business case that you bring to the table. And then we're going to look strongly at the team, because ultimately, particularly if you are early stage, there's no history to speak of. So we can only make our analysis on what it is that you're presenting to us. So those are the types of things that we'd want. Just to give a picture, in Africa, only Nigeria, and I stand to be corrected, has actually got an act that is focused on crowdfunding. The regulations are I think they're still working on them, which means the act is there, but the regulations are not yet there. So people are still operating on a vacuum. I know Kenya is developing some legislation around crowdfunding. South Africa is also developing some legislation. But what South Africa does is that they allow you to get into what is called a regulatory sandbox. So what they will do is they will say, bring your business to us for about 6 months. Allow us to test which of the statutory documents that we have in place right now it touches. So if it's an investment crowdfunding platform that is looking at debt, you will probably get regulated maybe like a microfinance institution. If it's a platform that is equity based, you would probably fall under regulation that looks at asset management and venture capital and the like. So there's ways to go about it. But I think outside of the statutory documents that are required, you would probably want to still have your basic business fundamental requirements, which is, your pitch deck, your story, your understanding of the market. Those are the things that the platform will look at. And if there are any extra regulatory things, we will pass them on. I just needed to add that because I know part of my crowd is not in the US, and they're like, okay, so
Yeah,
Form C
absolutely.
won't work for me. Okay, we've got a couple of minutes left, and there are two questions. So maybe if we just move them quickly, I'm gonna go to this one. I'm gonna show it on stage. If you could answer that quickly, and then we have another question. If you have a question, please go through it. So Obonye says, "What are the 3 to 5 things you would advise us to focus on so we invest quicker?" By the way, ours is not a unique position, and understanding that, as I previously explained to you, the culture of investing is not as robust as probably the culture of investing in the US. So I think there's still some of that inertia or paralysis that comes from somebody just framing to themselves, where do I even begin? I want to invest. I've got this pool of funds. So this is a follow-on question from the one that was asked earlier. If you can take it from there.
Yeah. So the one thing I would say um, about the question that was asked earlier is that the best place to start in a culture that you just described, where people are maybe a little risk averse, maybe not really familiar with investment, is creating an investment club right before you invest, and having a group of trusted people. Where you're all potentially investing or bringing pooling your dollars, but you're also talking and learning about investment, and what that looks like. I know in the United States, an investment club can be a legal business. So I'm not sure what that might be like, somewhere outside of the U.S. But I think that is a great way to really learn about investments. Is by being in a club, being in a group of people who are talking about investments. Who there may be in that group people who are a little bit more advanced than you, people who are right where you are, and people who are a little less sophisticated than you are with investing and coming together, to learn about this, to learn about due diligence, how to do due diligence. These are all things that are very important before you start deploying capital. That's the quick answer to that question.
And if I can just add to that, so traditionally, what we have in our region is we'll have what we call motelo. These are people that come together, and they operate sort of like an investment club. Some of them may form a legal entity. Some of them remain sort of as a partnership. But what the banks will do is they will allow them to open a bank account. So they don't necessarily need to form any sort of legal institution or legal body. So they will have this bank account. And oftentimes, where we've seen it coming up is that a lot of times they operate on a short term basis, as in from January to December, people are putting in money, they're deploying that money, or they're saving that money, using it. However, some of them will actually operate, and I'm not writing them out, but they will operate as sort of like small micro loan institutions so that their money grows in value. So that is what people are used to doing. Now you've got other models where people are now starting to get into property. and maybe collectively buying a property and then growing their investments that way. So I think, what you're saying is correct. They need to organize themselves. They need to sort of have a framework of that says this is how we are going to participate in our investment club or Motelo or Stockfell. And this is what we're going to look at. And I think maybe the gap is where they can get that knowledge or understanding. And there are certainly people who can help them. I've recently just had a chat with a couple of friends where I sort of showed them, what they can do in terms of designing, quote unquote, an investment charter. I took them through a whole risk analysis of what their risk appetite was at an individual level, and then collectively just taking a geometric mean or average of that risk capital and say, okay, fine, let's use this as a starting point. As a group, collectively, you are a high risk taker or you're an above average, and based on this is the sort of asset allocation you might want to look into. So we're starting to realize that maybe that is also part of what we need to do to help people move across and give them a structured way of getting to that point of investment. So certainly, I mean, I don't know if you've got any investment club experience, but I think this is where you've got to take it. We have a little bit of time left, so I'm gonna move on to the next question, and I'm gonna show Mimi's question on stage, and she says, "Does investment funding have any boundaries?" I'm gonna try invite Mimi to stage. I don't know, maybe she can tell us what the context of that question is. Mimi, you should be unmuted now.
Okay, can you hear me?
Yes, we can.
Yes.
Yes, I think my question has been answered. It was just basically to Bill about whether being in Botswana, can somebody look for investment funders in the US? And I think he did answer that one.
Okay, and certainly, as a follow up, Bill, there's a request to share your information. Mimi is based in Silver Spring, as you can see. I think she would actually be a very good candidate for the Rec CF stuff. Maybe you can just share a little bit about that.
Yeah. So one of the interesting things about Reg CF is your company has to be based in the United States, but it doesn't have to do business per se in the United States. Anyone from anywhere in the world that's over the age of 18, can invest, in a Reg CF. But if you're looking at Reg CF, in the United States, being in Maryland, there are, in my opinion, and this is Bill's humble opinion, there are way too many regulations around, investment crowdfunding. So, when you think about investment crowdfunding, you have to find a portal, and you have to find a portal that fits your needs. There are 76 portals in the United States. The big three, WeFunder, Republic, and gosh, I can't think of the other one. Um, that's embarrassing.
An
But
African crowd, an African crowd.
the big three actually dominate the market. When I say dominate, they have about an 80% share of all the dollars raised. But that doesn't mean that they're the best, right? For whatever it is that you're doing. If you're focused on real estate, then there are real estate focused platforms. If you're a small local business, then there are platforms that are focused on small local business. If you have a green or a sustainable business, there's a platform that is focused on that. So, making the decision about what platform is going to be best for you, as the founder of the entrepreneur, is kind of the first external decision that you have to make. Now, we talked a lot about what the internal decisions are that you have to make, but that's going to be the first external decision that you have to make, as to what platform you actually want to raise on. There are rules around Reg CF that are general Reg CF rules, and then platforms have different rules. One platform requires you to raise $50,000 as your minimum. There are other platforms where you can actually set that minimum, right? You can set it at 10,000 or 20,000 or whatever that number is. So I would say that if you're thinking about Reg CF, right, the first external question that you need to answer is which platform is going to be best suited for your company and your raise.
Awesome. And Reg CF just being regulation crowdfunding. Bill, I've put your LinkedIn URL in the chat. How else can people reach out to you if they have more questions and really want to consider crowdfunding?
Yeah, so they can visit my website at crowd-max.com. And if you're on this call, you can literally reach out to me at Bill Huston at crowd-max.com. That's my email address. And let me know that this is where you heard me, and we can have a pretty good discussion. Kind of at no charge. Initially, so that because you took the time to be here, you took the time to be on Africa Crowd. Definitely want to reciprocate this opportunity with anybody that calls. So just let me know that you were on the show, and this is where you got my information from, and we can have a nice conversation about crowdfunding.
Okay, our hour is up. Where is crowdfunding going, Bill, when you look in your crystal ball?
Crowdfunding is going to be enormous. It is going to democratize access to capital in communities where access to capital has been heavily restricted because there is such a great gulf between the wealthy and the non-wealthy. Non-wealthy people are going to start using crowdfunding more and more and more to access the capital that they need. It may not be billions of dollars, but it will be enough for them to grow sustainable businesses, sustainable business economies, and sustainable crowdfunding economies and ecosystems.
Okay, thank you for that. Thank you for everybody that showed up. Thank you for your questions. We'll certainly invite Bill back. He's a wealth of knowledge, and we want to keep learning from him. And do let me know if there's anything that we didn't cover that you would like to cover for those that have my contacts. Thank you very much. Much appreciated. Cheers. Thanks, Bill. Thanks, everyone.
Thank you.